Alright, so today we will talk about the turbo business, financial accounting, Chapter 9, work example 1. Okay, so first we take a look at the work example 1, and this work example is to prepare the profit and loss appropriation account. So we need to know what is the profit and loss appropriation account. That means after in a partnership, after all the partners they have contributed all the capitals, and then they do the business, and then they have the net profit. So they need to deduct some of the profit and loss that should be shared by the partners, and then they will need to prepare this profit and loss appropriation account. So let's see how we do the profit and loss appropriation account. In this example, there are 3 partners. Okay, Daniel, Martha, and Jill. So I'll just use the capital name, the first capital, as the DMJ. So in this DMJ, the profit and loss sharing ratio is 1 to 2 to 1. That means the total is 4. 1 over 4, 2 over 4, and then 1 over 4. And they have contributed different capitals. Daniel contributes 200,000, Martha contributes 800,000, and for Jill contribute 500,000. And for the current account, the balance at 31 of December 2006, Daniel, they have 115,000, and then 22,000. The last one is 36,000. So we have prepared this format, and then help us to further do this question. Okay, according to the partnership agreement, there are a few elements. The first one is the annual interest. Says interest on the capital. The first one, interest on capital. Interest on capital is 2%, and the second, you have the interest on current account. This is 4%, and then you have the salaries. So this salary is for the partners, okay, only for the partners. Okay, next one, partners, we have Daniel. Daniel shared annual salary is 120,000, and for Jill, that's 60,000. Okay. Okay, next we have the net profit. The total net profit was the Okay, sorry, I missed one part. Here, the fourth one. The fourth one is the interest on drawings is 10%. Okay, and the net profit is 5126960, and the last one you have the information. Is the drawing. Drawing, the total is Daniel, Fur and Jill. Okay, so here is a summary of this work example 1. We have 3 partners, and then they have the following capital balance, current account balance, and also the partnership agreement. There are 4 related elements. The first one is interest on capital, 2% per annum, interest on current account, 4%, and all these 3 items for the salaries will less your net profit. Why? Just think about it. For the salaries, if you pay the salaries to the partners, your net profit will decrease, right? And also for the interest on current account, you also pay to the partners, and interest on capital also pay to the partners. But for the interest on drawing is to discourage the partners take over the capital from the business. Therefore, for this interest on drawing will add the net profit. That means increase the net profit in the appropriation account. Okay, so based on this scenario, we can work out our profit and loss appropriation account. Of course, first write the 3 partners' name: Daniel, Martha, and Jill, and then profit and loss appropriation account for the year ended 31 December 2086. Okay. So next we come to the net profit. So net profit, we have the net profit. For the net profit is 5129060. Okay, next one we should first add the items that will increase the net profit. That means the interest on drawings. So how to calculate the interest on drawings? We'll base on the drawings and then take a certain percentage as the interest. Therefore, interest on drawings. For the interest on drawings, we have the Daniel, Martha, and then Jill. So Daniel, the drawings is based on here, 180,000 times 10%, and then others also times 10%. Okay, so we have the interest on drawings. The last one is 9,000. Okay, we add them all up. We have 44,500. So we had add this first, and then we got 547,460. Okay, this is for this part, and then we start to less all the items, the other three items. The three item is interest on capital, interest on current account, and also the salaries. So we let these three items. Okay, we pay it one by one. The first one is interest on capital. Okay, for interest on capital is 2% per annum, and then we have Daniel is 200,000 times 2%. Martha and Jill for the same operation. Okay, so all this we have times 2%. That means we have 4,000, and then we have 16,000, and the last one is 10,000. Okay. Okay, so we add this all up. We have 30,000. Okay, we have 30,000, and then next item will be interest on current account. Same. Daniel, Martha, and Jill. So take a look. For the current account total, we times 4%. Okay, so we got 6,000, and then 880, and the last one is 1,440. So we add this all up, and then we got 8320. Oh, the last one is the partner salaries. So we just have two partners. We have the salaries. That means it's Daniel and Jill. And remember, this salary should be in the annual term. Okay, annual term. Okay, the total is 180,000. Okay, so we let this three item together, and then we got 329,140. Okay, that means 547,460 minus 30,000, and then minus 8,320, and then minus 180,000. Okay, so you got 329,140. Okay, and for this part, we need, this is the main important part of the appropriation. Okay, an important part. So for the appropriation is now, this one is important, share of profit. So share of profit, how to share? Daniel, remember the share proportion, 1/4, 2/4, and 1/4. So we need to write it down. Daniel 1/4, Martha 2/4, and then Jill 1/4. So that means we divide 329,140 by 4, and then for Daniel you got one proportion, that means 82285, and then Martha got two proportion, that means 164570. Jill is same as Daniel. Okay, so we got the same part, 329140. Okay, this is the share of proportion. Okay, this one is the work example 1 of Turbo Business Financial Accounting Chapter 9, the work example 1. So remember, for the prepare the appropriation account, remember you need to have net profit and then deduct and also add interest on drawing and then deduct 3 parts. If you don't have this part, just simply keep it. Interest on capital, interest on current account, and also partners' salaries. And then we have to share the profit. Share the profit based on the share and profit and loss ratio. Okay, and you got the same amount here. Okay,